All right, awesome. Thank you, Daryl, as always. I was wistful. I was hitting up Daryl on Slack saying, you know what? This is our last webinar together in 2020. What a crazy year. I mean, I was thinking back, it really seems like almost a lifetime ago. So this time last year, my family and I were skiing in Telluride. And then in February, my wife and I went to India for 2 weeks, and we just missed being quarantined in the country by 11 days. On March 7th, James and I went to the last NBA basketball game of the year. We saw the LA Lakers play the Clippers, and then that got shut down. And then it feels like March lasted until last week, and then all of a sudden it's December and it's time to reflect. So what a crazy and amazing and weird year. And it's a really good example in trading. One of the things we talk about is, just having a probabilistic mindset and letting go of the outcome. And this year of any year was that for life. You can have all these plans, you can think something's going to happen a certain way, but I guarantee you, and myself included, sitting there, and I looked at my journal entries from January and the stuff I was thinking about or worried about. Ha 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 ha. I mean, it's just like, oh my God. So anyway, it's just this whole year has just been a trading mindset kind of a year. So yeah, one for the scrapbooks. So crazy markets in 2021. So what I want to do, and tonight really is just kind of talking about, hey, it's the end of the year. What can we expect going forward? What are some changes, that I want to make and focus on? A couple of them are going to be pretty drastic. And then, it's the same thing as like our goal is to extract money from the markets no matter what the conditions. And so we want to dive in and get a sense of what those conditions are. And we've got a mix of folks in here. I know some of you are already in our trading rooms and you're kind of dialed in. And so, the content tonight is really going to be focused on, bigger picture stuff that we want to look at, and we'll look at some trade setups as well. And then if you're not in a room or you're newer, this is just kind of a, welcome aboard, and, just kind of some things. The goal is to kind of give you guys some actionable things that you can do for next year, and really just kind of prepare your family, prepare your finances for what's coming on. Now, you may think that I'm going to go the doom and gloom route, because doom and gloom catches people's attention. But you'll be surprised. I mean, there's kind of some of that, but you'll be surprised, I think, at the direction that we're going to be going tonight. So first of all, if you're here, I'm assuming you have some interest in trading. And I think it's really, really critical. Yeah, HODL. It's really, really critical that if you are trading, you got to really get your arms wrapped around why. Okay. Otherwise, it's just another addiction. There's a lot of things you can do to release dopamine that don't cause psychological and financial destruction. So if that's the path that you're on, where this is just an addiction and you just can't get enough of it, just I really encourage you to kind of look at this as a skill that can be acquired. And trading is a skill and a mindset that opens up a lot of possibilities. As my 10-year-old kid would say, a hell of a lot. But the key with this is that is only possible once you master the skill of trading. And notice I'm saying skill, okay? It's like a golf swing. Hitting a smooth golf swing consistently is a skill that has to be developed after about 1,000 swings, and you have to keep at it every day. Trading is the exact same thing. You can read 20 books on trading, but that really will help you about zero. You got to actually swing the club. You got to place trades in a real market environment to build up your skill. So once you do that, why would anybody want to do this? For me, when I first started, it was extra income to enhance total monthly earnings. The idea of managing a part of your own finances in retirement, freedom from the corporate world to move into an activity that you enjoy. This is a big one for me. I love trading. I love looking at the markets. Every morning I wake up, it's like kid in a candy store. What's going to happen next? Some mornings it's like, wow, these are great. And some mornings it's like, oh my God, can I go back to bed? But that's great. That's part of the fun. The ability to generate a consistent income to cover expenses and invest in tangible long-term assets. I'm a huge, huge believer in that. And the part about trading a lot of people don't talk about is that ultimately it forces personal development. And I say forces because if you don't address personal development, this ain't going to work for you if you're doing this on a discretionary basis. You have to acknowledge any past trauma and let it go, so that unresolved trauma doesn't trigger and work itself out on your own trading decisions. And I say this from the perspective of, my childhood was pretty good. I wouldn't say that I was someone that had quote unquote trauma, but over time I've learned things like, my parents divorced when I was young. There was some stuff there that I packed away. It would work itself out in its trading if it wasn't addressed. I've also talked to clients who have gone through what I would call serious trauma. Okay. And there's ways to identify that and release that. And I say that just because I have seen the shifts in people is when they're able to kind of face that head on, let it go, and move on with their life. And I know this is a cheesy thing to say, but by becoming a good trader, you actually end up becoming a much happier person because you're forced to deal with that stuff. And there's a term I heard about this, and it's just called, if you can just learn to move through that stuff quickly, it makes all the difference. So anyway, and I know we're not here to get a psychological evaluation. We're here to make money. So let's go to that part. Chills. I wish my parents got divorced when I was young. It's funny when they got funny. When they got divorced, I was like, it's about time. They just weren't compatible. So save yourself from yourself. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end and hold on to losing positions too long. And in this type of environment that we've seen in 2020, where the VIX is 3 times higher than what it's normally been, the moves are exaggerated. Okay, this is going to be multiplied by a factor of 10. Yes, there's a lot of traders that have made a lot of money this year, but there's a lot of traders that have blown up, believe it or not. Part of this is because we got a lot of newbies floating around here. Robinhood alone has opened up over 4 million accounts. Thinkorswim has opened up accounts. Tasty Trade has opened up accounts. TradeStation has opened up accounts. I think it's the last I heard was something like 13 million new accounts this year. That stimulus money is going to work. The good news is that money is going to flow to more experienced traders. Okay, that's you and I, and we thank everybody that's diving into this market like that. So the 2 best trading books that are out there, you're going to be surprised, they're really not about trading at all. First is Trading in the Zone. If wherever you are on this journey, if you haven't read that book, please go flat, get the Audible book, and listen to the whole thing. And then from there, Letting Go: The Pathway to Surrender. I recommend these 2 books to anyone I meet who is interested in trading. And for anybody that's not interested in trading, I also recommend this book as well. You have 2 versions of life. One where you've read this book and you put it into practice, and then the other one where you haven't. And the one where you haven't is not as interesting. Now, without this awareness, without this mindfulness, what's going to happen, again, especially in a market like this, that's awesome, Patrico. This is what we're trying to avoid, because our brain, our ego, basically our unconscious is programmed for this. Okay, what happens? We get into a trade when it feels safe. All right, we start to get thrilled when we're winning, and then about the time we experience euphoria is when we start pulling out spreadsheets and mapping out how much money we're going to make over the course of the next 10 years of our life, because we're trading so good right now. And then it rolls over and there's a little bit of anxiety. And then right here is denial, because it's like, yeah, it's going to come back. And then there's fear. Oh, crap. What if it doesn't go back to where it was? Because here I was up $1,000. I've already spent that $1,000. So I can't get out now at break even for the fear that it's going to go in my direction. That's what causes the most people to lose the most amount of money, the fear that they're going to miss out and be wrong. And then there's depression and panic, because it's like, wow, I screwed up. And then there's capitulation. Capitulation is when you get out only because you cannot actually take the pain and suffering any longer. Okay, that sucks, but guess what? For us, that's our best entry point. Another person's depression, panic, capitulation, and despondence is our high probability entry point. That's just how trading works. So just think about that. And then it's a cycle. We want to be on the side of this. You're either on the wrong side of the cycle or you're on the right side of the cycle. And that's it. If you're not aware of it, a lot of times you're going to be on the wrong side of the cycle. Yeah, we'll see what Federal Express ends up tomorrow, right? So what are we going to cover tonight? We're going to cover how to get John a razor before his next photo shoot and a haircut. We're going to cover what's going on. Okay, so look, it's not 2008. Back in March, there was a little bit of 2008-ish going on, and that's what I was focused on. But the question now is this 1999? You guys know what happened at the end of 1999. How do we trade this? What is the Fed doing? What about the vaccines? What about all the new IPOs? I don't know if you guys know this. I thought this was kind of an interesting stat. DoorDash and Airbnb, with $5 billion in revenue, both came public at $168 billion in market cap. Okay. Do you guys remember the March 2000 deal? Well, I don't know. Some of you guys may not have been alive then. But Time Warner, AOL bought Time Warner in a deal valued at $168 billion. So anyway, I don't think we're there yet, by the way. I just thought that was an interesting stat. What about all of crypto? Digital assets versus physical. We're going to talk about that. Think Disney. Spanish flu comparison. Okay. We're not going to actually, I had some slides on this and I think I ended up taking most of them out. But the main point here is that everything in the news right now is doom and gloom, and the Spanish flu and COVID-19 are not the same thing, just FYI. But the point, but everything did get shut down, and that has consequences. But my point here is, after the Spanish flu, after everything that happened, after the current environment was destroyed, it made room for the new. And then the Roaring 20s happened. So even though the news right now, anything you watch on the news is going to be bad, because bad news sells, bad news creates anxiety, and people who are anxious sit around nibbling high cholesterol foods, and so they can watch, stick around and watch the commercials that are selling drugs to combat high cholesterol and diabetes, right? And whatever. I just all that stuff drives me insane. So, but the point is, things could be great, and you don't want to discount just because there's a lot of bad news doesn't mean things can't be great. So, what's safe, and where are the opportunities? So 2020 has been a crazy trading year. It has been percentage-wise, dollar-wise, my best trading year. So I started this account with $1,371,000. That was my large account. P&L year to date, $15.5 million. It's a decent return. And so basically taking about 1.4 million and turning it into almost 17 million. And there's still time in the rest of the year. And so it's, a little over 1,000%. And I've also wired out money. So these are big numbers, right? And so what I want to talk about is, okay, great, that was this year. What about the plan for next year? What am I doing after paying taxes with this money? And really, why not just leave it in here? So why not just have a $17 million balance and, screw it, try to go for $100 million, right? Well, there's a really good reason why I'm not doing that. We'll get to that too. And then I did take $200,000, part of the money I wired out. I took $200,000 and I put it into Tastyworks in August. And that account hasn't 10x'd, but it's getting close. And again, there's still some time by the end of the year. So again, really, really good trading year. And it doesn't mean just YOLOing and making these stupid bets. These are thought out, planned trades in terms of what we're doing. And then also doing a small account that's basically gone from 10K to 50K. So started off at 10, P&L year to date is about almost 40,000. I wired out 12 at the end of the year. At some point, we're going to reset this to 10. This is the one I do for the small account. But the point with all this is that with different size accounts in a crazy market, including March, right? It wasn't like, March was actually a good trading month. I think the worst trading month this whole year has been November. But the idea with this is that, being able to extract profits from the market, no matter what's going on in the news, no matter what's happening in the markets. And that's what we want to talk about tonight. So if you're newer to all this, I do have a book out. It's called Mastering the Trade. This was updated, I think, about 1.5 years ago. This is the 3rd edition. And that is a good way, if this is stuff at the end of this, you're intrigued, that's an easy way to kind of get a little bit more in-depth knowledge. Now, sometimes you might think it's like, oh, geez, John is just trying to sell books here. I get 25 cents for every book that you buy. All right, so it's definitely much more profitable, much more profitable for me to actually trade. But it is, writing a book is a huge pain. I don't know if I'll do another one, but I'm glad to have it there. You know, I always thought like, okay, I love doing this, and if at some point, you know, the proverbial Mack truck comes my way, and I haven't taught my kids how to trade, at least they could read this book. And at the end of the day, I do think that you know, the whole idea of work-life balance is, to me, crap, peddled by crapsters. I am a big believer that, you know, your life is your life, and I try to integrate trading into really everything I do. One of the things that I'm a big believer of, and it's been harder in 2020, is taking a portion of the profits and turning it into experiences. One of the things that we do annually is working with Virgin Unite and Richard Branson. That's at his Ulusaba place in Africa. We'll do that. You know, that's my son and I. We were all out there. And also kind of Necker Island. This is where we are in Africa. This is amazing. I'm sitting here, I'm explaining to him what I do. Dylan's heard this story before. He's like, come on, Dad, wrap it up. But anyway, just things like that. I mean, this is, you know, it's work-life balance it's just work and life and trading, and you just integrate everything. That's the way I like to look at it. Okay, let's talk markets. So, well, that's true, Jill. It does let people know that if they read the book and like it, you know, kind of where to go for more info. So, yep, that's for sure. So this year we have seen pockets of opportunity. All right. And I'm a big believer in looking for individual stocks that basically have a beta that's much greater than the actual S&Ps or the Qs. And by high beta, I simply mean if the spiders or the Qs move 1%, here's a stock that's going to move 2% or 3% or more. Otherwise, you know, just trade the indexes that are more liquid. So I'm looking for more bang for my buck. So we've had some great opportunities this year. Obviously, Tesla, Virgin Galactic, Amazon, PayPal, Peloton. I always call this Donkey Kong. That's DraftKings, Spotify, Shopify, etc. As the virus hit, this turned up volatility and did create opportunities on the short side of the indexes. All right. So to me, it doesn't matter if the markets are going up or down. Of course, not all trades work. The key is that you want your winning trades to be bigger than your losing trades. And then this is the whole key, guys and gals. You've got to learn how to keep what you've made. The most common story in trading is, you know, anyone can make a lot of money and then blow it up. What we're here to do is attempt to make a decent amount of money through specific strategies, risk control, and psychological tips and tricks. But more importantly from there, it's a skill set of keeping it. It is so easy to lose it. Keeping it is a skill set, and that's something we try to also teach and work through. And by the way, the secret, you know, I was talking earlier about, well, why not just keep all the money in the account and just keep trying to grow it? That's how you destroy yourself, okay? More, and then you risk it all and you lose it all, okay? I've been in a fortunate position where I've seen that happen to probably 3 or 4 dozen people. It's not fortunate for them, but it's fortunate for me to get to see that. What leads to the path of self-destruction? It's way more common than you might think. And so part of this is learning to be able to do this and be of a state of mind that you can actually keep it. That's the key. All right. Okay. So from there, what we want to talk about is what are the kind of setups that we like. This is just an example of a trade from earlier this year. This is the biggest trade of my career, and it started off innocently enough. Here we have a 30-minute chart. We have a textbook squeeze. We've got our RAF buy, okay? Beautiful stacked moving averages. Now, this is pre-split. This is when the stock was at about $1,650. Keep in mind that today at $650, what is that? That's like $3,250. I don't know. I probably messed that math up. So this was back in August, and it's doubled since then, right? So really good, you know, really good setup. And as you guys, this was back in August, and you know, here after the first day, and TOS was down, it was up $2.5 million, and that was at that point my biggest trade to date. But I decided to hold it one more night. or one more day. And you can see at this point, it's kind of like, oh gosh, you had a good year, so you just had a big trade in Tesla, right? Well, you're right. At this point, yeah, it helped my account. At this point, it was up $7 million. But remember, year to date, it's up 15. So there's, a lot of other trades in there that help that balance. So then I'm trying to manage this trade, and toss is down. And I don't know if you guys remember this. It was insane. And I love this. I don't always test my code, but when I do it in production. But from my phone, this is definitely a first, I'm sitting there checking the box so I can close out my 500 lot call debit spread and my stock, and book my gains. It was really an insane day. So the key with all of this that I found, and again, what I'm going to be sharing with you are techniques that work for me. And they work for me because they address, whatever issues that I have. Okay, so you got to understand, as a trader, you're going to develop a trading plan that fits your personality best. And so what I want to do is share the trading plan that I've found through trial and error that fits my personality best. Okay, and part of it is learning to manage everything I just told you about. How do I do this in such a way where I don't make a lot of money and blow it up? Because I did that 3 times. My first 8 years of trading, I'd make a lot of money and lose it, make a lot of money and lose it, make a lot of money and lose it. I don't want to do that anymore. So the plan that I put together over time is to deliberately combat that. So my trading plan these days is pretty simple. At the end of the day, I want my equity curve to go from the lower left of my screen to the upper right. Okay, that's it. Nothing else matters. I don't care. I don't care why something's moving. I don't care what's on the news. All I care about is that my equity curve is going, in general, from the lower left to the upper right. If that's not happening, I close stuff out. And that's it. End of story. Makes my life very, very simple. I'm not trying to be right. I'm trying to make money. Specifically, my goal is to make a 2.5% return on my capital each week while not risking more than 5%. And then I want to wire out 2.5% a week. In a perfect world, I could make about 4%, wire out the 2.5%, and my account grows by the remaining 1.5%. Now, the biggest question I'll get, well, what happens if I lose 2.5% that week? Tough. You still got to wire out that money. Your job as a trader is to wire out 2.5%, whether you make it or not. It's like owing money to the mob, okay? If you can't get the money on Friday, Vinny's going to break your leg, okay? So what are you going to do about it? You're going to find a way to get him the money. Same thing here. Because what happens is this: once you start wiring it out, you start actually really taking this seriously. Okay, this is no longer Monopoly money. This is no longer a game. This is no longer a fantasy. This is real life. Okay, and then the next week, you're a little bit more careful about taking losses. Okay, this forces you to treat it like a business, and it helps to correct many, many, many psychological trading errors. Yeah, Ralph, otherwise, your spouse could break your kneecaps. So how does this work? No, it's good. Awesome. Aha moment. Yeah. I mean, look, and you got to understand, everything I'm telling you is just stuff that I've just learned the hard way. I wish I could have, I read a checklist when I first started that said, just do it this way, you'll be fine. No, I was the stubborn mule, the whole path. So how this works is, let's say you have 100 grand, because that's an easy number to do math with. If you followed a 2.5% a week plan, because guess what, 2.5% a week initially doesn't sound sexy. When you're trading options, one of the psychological barriers is trying to go for the kill. Okay, well, you're trading options. Can I buy an option at 3 and sell it at 10 and maybe double my account this week? Yeah, you could, but if that's your goal, you're going to destroy yourself. Okay, the reason your goal is 2.5%, because that means you set your risk at 5%, and that is sacred. Whatever it is, just don't go below that. Here's a tip. One of the questions I get too is like, well, if I hit my 2.5% goal, am I done? No. Here's the secret to this. So let's say you have 100K, you don't want to risk more than 5%. That means if your balance drops to 95,000, you got to liquidate all your positions. This 5% is a trailing stop. So let's say on Thursday, you've had a good week, you're at 120K. What's your stop loss now? 95K? Nope. You trail it up to 115K. So you have a shitty Friday and you get stopped out. Well, guess what? You still made 15% on the week. Okay. That is the secret to doing this. Okay. This is not about being right or wrong. This is about managing your net liquidating value. That's it. It's a business. It's your business. So if you did it this way, you could start off with $100,000. You could wire out $130,000 in income, and at the end of the year, have an account balance of $120,000. Okay, you're taking money out of your account, and you are building up your account. So the way to think about this, instead of getting all wrapped up in, well, I'm trying to make a killing. All the economics books talk about the magic of compound interest at 1% annually. Oh my God, kill me. That means that I have to live for 487 years in order to get a good return on that. Okay. I'm sorry. That's just the science hasn't caught up with that. But what if instead of 1% annually, you could compound your gains at 2.5% a week? That's what we're talking about here. Yes, I know we're taking out money, but you get the idea here. Okay. The point is 2.5% a week compounds and can turn into a larger account fairly quickly. Now, what's happened this year is that I followed these guidelines, and I did have a few crazy trades on Tesla. You saw the one that made $3.7 million. So I've had some weeks where I'm up 30% or 40% or 50%. I'm not counting on that, okay? When it happens, it's like, oh, awesome. That was a good surprise, okay? So that's the idea. I'm not risking my entire account on one trade. Now, were there losing weeks? Of course, but there weren't a lot. Why? Because I know if I lose money, I still got to wire out that money to Vinny. He is not going to be happy. So I try to control my risk pretty good. Now, if you don't have a plan, again, that's my plan. If you don't have a plan, you're just going to get caught up in the cycle of small winners, large losers, chasing stocks, just like a dog's chase cars. And at some point, you're going to get run over. Have a plan. The best thing I learned about trading is you can make a lot of money trading while not being perfect. Okay. Okay. So what happened in 2008? Began with the housing bubble, topping in 2007 as no income verification mortgages got out of control. By mid-2008, the realization hit and property values and other assets tanked as liquidity evaporated. So a lot of people right now, I mentioned this, are confused because the real estate market isn't tanking. Well, guess what? The liquidity has not evaporated in any way, shape, or form. Okay, there's plenty of liquidity. All right. When there's no liquidity, okay, and there's no readily available form of debt, all asset prices fall. That's not what we're in. So 2008 was just, it was, as Greenspan said, of the 13 most important financial institutions, 12 were within 1 to 2 weeks of failure. It was that close. So the Fed and the Treasury poured trillions into the financial system to unlock it while everything was at a standstill. Okay. Although they let Lehman Brothers go bankrupt, i.e., who did they upset? They did step in and rescue banks and the car industry. So so the question here with this, and I'm going to get to this, is the whole idea of monetary policy. So what they did is they came in, they print, and then they reined it back. As soon as things looked good, they stopped. Okay. They still feigned interest in the idea of not having loose monetary policy. Now, during this time, I was on the front lines of this. I was watching it. I thought it was Armageddon. I was buying gold. I was buying silver. I was buying bullets. I was buying land. I was like, this is going to destroy. This could destroy America. I was like, this is the Great Depression all over again. And what was fascinating about all this, and yes, the markets crashed, and yes, it got pretty nasty. But you know what? When we'd go to the movies, there was a long line. When we go to Walmart, there was a long line. And I was like, it kind of hit me that, life goes on. People still got to buy toilet paper. People still want to be entertained. And guess what? Walmart was taking dollars, not gold coins. So, it's easy to get caught up in the end of the world, but at the end of the day, people got to get up, they got to eat, they got to shave, life goes on. So what about this current market? In March, we saw the fastest decline in history, faster than 1929, 1987, 2000, and 2008. Okay, 2 of those I traded through. In 2008, from the top in October of 2007 to the bottom in 2009, that was 17 months, the market's declined 43%. This happened about 4 weeks in 2020, right? That's how fast it was. So what's the new normal now? Because as you guys may have noticed, the markets are no longer falling. So the new normal, Disney is the protocol of the new normal. Jesse is saying, so I should sell all my gold and silver. No, we're going to get to that. Disney is the new normal. So here's where we are now. earnings were crushed. Their physical properties and assets were crushed. They had to lay off 32,000 people. They will not hit pre-March earnings until 2023. They launched Disney Plus as their new digital property. Stock price makes new all-time highs. Okay. Physical property, digital property. All right. Digital is the new normal. Okay. The digital assets are the new normal. Do not forget that, because that's going to be the theme of tonight. Whether it's Airbnb, whether it's Facebook, whether it's crypto, this whole process has ushered in a compression 10 years into one. All this stuff that was going to happen over the course of 10 years, it's happened in one, and it is ushering in a kind of a new age. Some of it's going to be really good. Some of it is a little scary. So let's talk about this. So in March, a lot was unknown, and when something is unknown, there is temporary chaos. The key word there is temporary. Out of chaos arises the new normal. So what is the new normal? Here is the new normal. Central banks normalized modern monetary theory. Okay, so what does this mean? This is the belief that the state capacity for deficit spending and debt monetization is essentially unlimited. In 2008, they did this, but it was resisted very strongly. In fact, they stopped it as soon as they could. They went back to reducing the balance sheet. They went back to quantitative tightening. Okay, if you guys remember that, 2011, 2012, they're like, this is over. We have to stop this. It's not a good idea. That is over. All pretenses are gone. It is now normalized. Spending restraint is over for the foreseeable future. This is huge. The key point here is this is debt which will continue to grow, will never, ever, ever be repaid, and that will have two key repercussions that we have to understand, which we'll get to. So first of all, if you're not familiar with debt monetization, what is it? This refers to the purchase of government bonds by central banks to finance the spending needs of the government. Simple enough, right? Remember, the central banks can create money with the push of a button, literally out of thin air, like a helicopter dropping cash in your backyard. This leads to an increase in the total money supply and typically leads to inflation. There is no more restraint on this function. Money will be printed as needed for the foreseeable future. I think personally that this is going to lead to UBI, which is a universal basic income. I think we're actually just a couple of years away from that. And I think that's going to come from the central banks. Guess what? The central banks are doing right now? They are doing a deep dive into what it would take to have their own digital currency. Okay, then they can cut out the middleman, i.e. the Fed, and send money straight to the citizens without Congress approval. I think that's where we're heading. So crypto, no longer a fad. We are looking at, let's talk 5 years from today, 10 years from today. What can we do today to get ready for this? We're looking at a bankless future. COVID-19, no matter what your beliefs are on this, is it real? Is it a fraud? It's irrelevant. It is ushered in the digital age. It's hard to get coins, and many places insist that you use your credit or debit card instead of cash. Sweden is exploring doing away with cash and moving to a 100% digital currency. Central banks are also exploring a digital currency. These are all things that were kind of like 10 years down the line that have been moved forward to right now. So crypto. I would say that, I've watched crypto and traded it. It's kind of like, oh, this is cute. This is a fad. This time it's for real. In 2020, the crypto world spawned the building blocks to move towards a digital future across payments, lending, insurance, asset issuance, and exchanges. Okay. Basically, these are the examples of the building blocks needed to power a fully decentralized and algorithmic financial system, also known as decentralized finance, or DeFi for short. Note, you can trade, i.e. invest, in the blue ones below on Coinbase. They're adding more as time goes on. There's Maker, which is crypto dollars, Uniswap, automated market making, Compound, liquidity mining, Balancer, blah, 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 blah. This is a much longer discussion, but the point is you can actually invest in these. And I would say a confidence of about 92% that the 2020s, the roaring 20s, in 1920 saw the end of prohibition and, $5,000 bills and $10,000 bills. The roaring 20s in 2020 are going to be based on this. All right. And that's a way to participate in it. I'm going to talk more specifically about this in a moment. Now, one of the biggest things I'm interested in trading. Okay. Obviously, my first love is going to be trading, extracting profits from the market. Okay. This is, Amazon, Shopify. Let's trade some options. But then when you have profits, what do you do with them? All right. I like to take out a percentage of my profits and I divide that into experiences, travel, different things like that. Basically, experiences with my family and friends, and then tangible assets. And tangible assets, this is how I look at that. Is first of all, so the blue here is 2020, what I allocated, and in 2021, I'm switching to the red allocations, okay? So in 2020, I did 50% real estate, 35% gold, 10% silver, and 5% crypto. Now, when I say all this, let's talk about what this means. For real estate, I actually try to focus on short-term rentals. Why? Okay. Well, for example, we'll buy like an Airbnb and set it up, and it's something that it's a family business. The kids can get involved, and we do it as a short-term rental, and then my wife does enough in it to qualify as an active real estate investor. And then what you do is you get a positive cash flow property, but with the depreciation, you get losses. And because it's active, you can deduct that against your trading gains. Okay. It's possible that you could have a couple of Airbnbs, and let's say you have a $100,000 account and you make $30,000 in profits, that could end up being tax-free because you're able to deduct the tax savings in that situation. All right. So that's specifically why I do that. But also it's long-term, it's things that are going up. They're things that you can leave your kids. They're things that you could eventually sell. So 35% gold. I'm talking, GLD ETFs. I'm also a fan of bullion. Bullion's just hard. Where do you put it? You got to find it somewhere safe that's not with you, that kind of stuff. Same thing with silver. And then 5% crypto. How am I changing that for 2021? I'm going to do 25% real estate, 10% gold, 5% silver, and the bulk of it into crypto. Of that, I'm going to put 75% of it into Bitcoin, 20% into Ethereum, and then 5% into essentially the decentralized finance tokens. That's my plan for 2021. Yeah, no oil. What percent of cows? I do have cows and zebras as well. And oil's not bad either. So oil's not bad either. You just gotta, you gotta pick your poison, so to speak. Yeah, Raul Paul is all in for sure. Now, Bitcoin, if you guys have been watching it, has been going insane. The 1618 extension on Bitcoin from its last test of 20,000 to its low is 30,100. So very possible we come all the way up here, pull back to 20,000. But I think the idea that we could see $100,000 Bitcoin by the end of 2021, early 2022 is very realistic. So yes, this is for real. What do we do with this? Now, I want to point out that with crypto, I trade Tesla. I'm not looking to trade Bitcoin. I look at Bitcoin as land. It's you buy it and you forget about it. Now you can trade this through your broker. You can buy GBTC. That's an ETF there now, and you can do ETHE, which is the Ethereum ETF, and then there's Litecoin. Now, what are the problems here? GBTC is fine. It does trade right now at about a 25% premium over Bitcoin. It's been as high as 40%, and it's gone negative 5%. Okay, it fluctuates. There's some bonuses in that. If Bitcoin spikes up, the premium expands, you could actually sell into that and buy it back on the dip. You'd buy it back cheaper and all that kind of stuff. Ethereum is fine. This premium is going to stick. Litecoin, I can't justify a 3,000% premium over Litecoin. The other way you can do this, I just do it through Coinbase or Coinbase Pro. You can actually buy Bitcoin, Ethereum, Litecoin directly. Now, I know Bitcoin seems expensive at $22,700. You don't have to buy one. You can buy, 1/10. You can buy 1/100th. All right. That's nice about it. You can just kind of split it up however you want. So, so why is this a big deal right now? Right now, the big changes in Bitcoin is that it can now be held with a prime broker, which means institutions can invest in it. All right. MicroStrategy, this is a public stock. They own something like is it $450 million of Bitcoin? That's their fund. Okay. His philosophy on this, he's a smart guy. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind the wall of encrypted energy. Okay, well, that's a little out there, but a little bit better, a little bit down to earth, is a bank in cyberspace run by incorruptible software, offering a global, affordable, simple, and secure savings account to billions of people that don't have the option or desire to run their own hedge fund. It's the world's best treasury reserve asset in the emerging dominant monetary network. It's the solution to the store of value problem faced by every individual, corporation, and government on earth. And he's saying it's because of what I just talked about, the unleashed monetary policy. Every investor is in danger of losing their wealth due to the great monetary inflation, what I just talked about. We all need a store of value that is not based on fiat. Bitcoin is the solution, an investment grade, safe haven, treasury reserve asset. So that's Bitcoin. So at this point, I look at Bitcoin and gold in about the same light. I think that I love, to me, gold has got the 5,000 years of proven history. Bitcoin doesn't have that, but it's got everything else that's identical to gold, and it's digital and it's easily transferable. So if you're looking for long-term plays, to me, gold and Bitcoin and real estate are the way to go. But let's talk about gold real quick. So, yeah, so Akam, so MSTR, I don't know about investing in that as a stock, but I am very comfortable just buying Bitcoin. Yeah, so Coinbase is like an exchange. It's a crypto exchange. It's the easiest way, kind of for the new person to kind of go in and kind of get familiar with it. All right, so 2020 was a crazy year for gold. Let's look at charts. Charts are more fun. So if you guys remember this whole move, remember when gold used to be $400 an ounce? So I was a big buyer here and then sold it. This was a big trade for me. I bought a lot of bullion and sold it. And then I kind of was flat. I was out of it for a while. And then we started getting a big squeeze here. It's not shown on here. And so I started buying it again. We got new highs. I am looking that we're going to go ahead and hit this zone in probably early Q2. So this is the time to be buying gold. If you want to trade it, that's a 6-month trade. But I like to buy it just as diversification. What about silver? I don't know if silver is going to be able to make new highs. That was a crazy move here. It could do that again, but at the very least, 35 to 40 bucks. And for this, what I would just recommend, the easiest way to do this, you can buy the ETFs for silver, SLV, or gold, GLD. You could, of course, buy leaps on these as well. And I would just say, go out to September at least, because you want to hold this for a little while. And leaps are simply longer term calls. And then you could just buy the bullion if you like bullion. I like bullion, but it's a pain in the ass, to be frank. But, I like numismatics and things like that as well. Either they're all fine. I don't think you need to worry about end of the world kind of stuff. It's just having participation and exposure. The main thing here is that I know I can complete the sentence. Monetary policy is going to expand. That's the blue line. And basically, as long as the money supply is expanding, gold is going to rise. And right now, the money supply is expanding at 13% a year, and that's without stimulus, okay? That's a big, big number. We're talking trillions of dollars without stimulus. With stimulus, it gets bigger. Another thing to keep in mind is that the last time we were in this situation was way, way, way back here after the roaring 20s, okay? And it got to a point where they had to devalue the dollar versus gold and run large deficits, okay? So then they ran the deficits to the point where basically to the point, you can kind of see where it crossed here, but basically they had to, get to the point where it's like, we need to get some inflation going. Right now, we had to do QE, recapitalize the bank, and run large deficits, just like we did here. But there's no end in sight. Okay, we're nowhere near this. This is years away from topping out, maybe a decade away. So the thing about this is, not only is this something that's, it's like, oh, this is just a temporary fix. No, this is a permanent solution. And what we want to look at is, what is their way out of this permanent solution? Because, you know, the last time they got out of this, do you guys remember how we got out of this last time? How did we get out of this last time? It's called World War II. Now, believe it or not, I do not think in any way, shape, or form we are headed towards World War III, and I'll talk about that in a second, but we are headed towards something else. So the crazy high-end game for gold is a sharp rise in broad consumer price inflation combined with formal yield curve control by the Fed. This is a mouthful, so I'm going to talk about what that means. In this scenario, this is where gold goes to $5,000 an ounce or $10,000 an ounce. This is where Bitcoin also goes along too. So this is a very, very possible. So what's formal yield curve control by the Fed? Because that sounds fancy schmancy, right? Formal yield curve control happens when a central bank declares that it will peg its main bond to a specific yield. It will print money to buy as many bonds as possible to support that yield. Okay, what does that mean? When bonds fall, interest rates rise. When bonds rise or stay flat, interest rates stay steady. Well, guess what, guys and gals? Why would they want to do this? Well, if you guys remember back in 2006, back in the good old days when the government only had $4 trillion in debt, their annual interest payment was $485 billion. Interest rates were about, I don't even remember, 5%. So here we are now in 2020. I think we're at $27 trillion in debt. And guess what? Our annual interest payments are still at about $485 billion. Why? Because the interest rates on it are like 1%. What happens if all of a sudden on 27 trillion interest rates go to 5% and the interest payments go to 3 trillion a year? Whoever is in charge is going to have to raise taxes by a lot on everybody. And guess what? They're going to get voted out of office. Now, politicians are a lot of things, but boy, they're certainly not going to do anything that's going to cause them to get voted out of office. So what's going to happen is, to prevent federal interest expense from getting too high, they are going to have to do formal yield curve control. That's the only way out of this. The only other way out of this is war. And I don't think that that's in. I don't think that's in the realm of possibility. I was a military historian. I've studied all the pros and cons of this. I don't think that's in the cards. And that's a longer discussion. I think this is something that's easy to do in the short term. So how does it end? Who knows? But if you got some gold and you got some Bitcoin, I think you'll still be able to get your toilet paper. You'll still be able to get your Budweiser and go to the movies. And that's a little tongue in cheek, but the idea is that we can actually still, what we don't want, if you got to think of your cash as a large pile of melting ice. Okay, so if you got $100,000 today in dollars sitting there earning 1%, and today bread costs $3, and in 10 years that bread costs $10, you're just losing purchasing value every day. That's where we're going. So cash is trash, and you've got to be able to divert that into something else. This situation where we have yield curve control results in sharp currency deflation. And that's where gold and Bitcoin come in and save the day. So you either have that or you don't, because by the time this happens, that's when gold's at $5,000 an ounce and Bitcoin's well over 6 figures. And that's, it's a little late to the game. Another way, and another reason I talked about real estate in terms of short-term rentals. I also buy farmland. So I buy farmland in Nebraska just because I'm familiar with it. I grew up, spent part of my kid years there. And outside of Austin, I would call it ranch land. It would be tough to call it farmland, but it actually still rises in value with money supply. So that's another way to diversify, depending on what you're into. Okay, so what about stocks? Believe it or not, I do not think we're in the danger of a bubble type correction. Part of this is that when you start printing money, all assets rise. Okay, I'm not saying it doesn't end well. It's just that if you're preparing for the end of the world and it doesn't happen for 4 years, you're going to sit through a lot of pain and suffering while you're sitting there positioned for it. Okay, we're not here to encourage pain and suffering. We're here to make money. So COVID and quarantine has forced 10 years of digital progress into 1 year. This creates a lot of opportunities. We are in a new normal for some companies, work from home, digital properties, shipping packages for people working from home, et cetera, et cetera. And in other cases, we are seeing a return to old school companies involved in commodities, industrial and precious metals, and energy. So if we look at the monthly chart, okay, of the S&P 500, guess what? We have a squeeze pro that hasn't even fired yet. So it's easy to look at this and say, oh my God, we got to short this. Now, that doesn't mean we don't hedge. In fact, I had some hedges this week on that worked horribly because it's not ready to pull back yet. But this squeeze hasn't fired yet, okay? When the squeezes fire, think of it as 8 to 10 months of upside. Squeezes fire, 8 to 10 months of upside. This hasn't even fired yet. So I certainly would look for another pullback, but we're not done yet. And that's the main point there, especially the S&P 500. Now, the NASDAQ has fired, and this is really critical in that, we're already probably 2/3 into this rally, okay? I traded during this, and during this time, this was insanity. Now, from a percentage return, this was higher than what we're seeing right now. But this looks, you gotta, that looks pretty similar, right? But I don't think this is done yet. But remember, these things typically last 8 to 10 bars, and I think we're 6 bars into this. So just kind of keep that in mind. Apple has been a great place to trade, but it's also kind of nearing it's 2/3 into the end of its run, is another way to look at that. What about the Russell? The Russell is where all the value is. Okay, think of this. All of the restaurants, all of the smaller cyclical plays are all, and they're playing catch up. Okay, as you may have noticed right now, like Amazon, Microsoft are kind of trading sideways while this thing is just exploding higher. The monthly squeeze hasn't even fired yet, right? And then transports. I keep an eye on transports because transports are the first to go. They typically, when they fall, they're falling like 3 weeks ahead of everybody else, and they're still strong. So we saw a little bit of a blip on the daily chart this week, but it quickly recovered. Hasn't even fired yet. Okay. So keep in mind that even though, quote unquote, things seem high and the news seems bad, the charts never lie. Okay. The charts never, 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 never lie. That it's just that's the important thing to remember is that a chart is a map of people's participants' emotions, and that's it. And that is the truest thing you're ever going to see. So the question now is, let me take a sip of water. Question: do I day trade, swing trade, long-term trade? I would say my average trading window is 3 days to 3 weeks. So that's kind of my sweet spot. With options, especially you can do some premium selling and stuff like that as well. Day trading, I used to day trade more, but that's a lot of work. So you could do 10 quick day trades or one swing trade, right? One swing trade, you could make the same amount of money with a lot less work and a lot less commissions. Although, commissions aren't a thing there too. But also, I'm older. When I was in my 20s, I day traded. Now I got like 3 kids, a spouse, I have cows, I have zebras. I mean, they all want things from me and I got to attend to them, right? So I got to have energy at the end of the day. And if I'm day trading all day, I'm going to be exhausted. So it's part of it is lifestyle choice as well. And goats, I personally think that if you have 2 well thought out, well planned trades a week, you can make a comfortable living trading. Okay. Well thought out, well planned trades a week. That's all you need. Okay, so when I talk about monthly squeezes, when I say fired, I mean that this thing is already gone and it's nearing the end of its run. Not yet fired means these have room to go. Okay, so what's fired? Tech, XLY is like Amazon, semis, XLC, think Google, Netflix, XRT, retail, biotech. They're off and running. Okay, what hasn't fired? Financials. Healthcare, believe it or not. Biotech, yes. Vaccines, healthcare, no. Industrials, consumer, utilities, yawn. Materials, okay. These haven't started their move yet. So in 2021, think in terms of all these guys actually taken off while maybe tech takes a breather, okay. XBI is in there too. I actually don't know why I don't have it in there, but XBI is in there too. So here's a good example. So here's a monthly chart of Apple. I love Apple, don't get me wrong. And here's a monthly chart of 3M. All right. Beautiful squeeze here. And we've seen Apple essentially, triple, not 2.5 times, and it's still going, right? But it's nearing the end of this run. Now, when the run's over, meaning that, you get the loss of momentum, typically what happens is there's a drift back to the rising 21 EMA, and that could take, it could take 6 months, it could take a year, and then at some point it'll get its act together again. But just keep in mind that this is most likely, reaching the end of its move. That doesn't mean it ends tomorrow. It could keep running into February or March, but just keep in mind it is a mature move, okay? Whereas 3M hasn't even gotten its party started yet. Maybe it's going to take out these highs, maybe not, but the main point is that as money stops flowing into Apple, that's where it's going. Okay, so the key with this is look at those monthly squeezes that haven't fired yet. If you're looking for longer term trades, that's where you go. But it also will help with short term trades as well. So caution, don't get bearish just because all the news seems bad. All right, what we've got going on here is that, first of all, vaccines will push reopening efforts. Again, no matter what your beliefs are on the whole COVID-19 thing, because I've got friends who are like, this is the most serious crisis of our lifetimes, and other friends are like, this is a hoax. To me, that's all irrelevant. What's happening is stuff is shut down, okay? Vaccines will push reopening efforts. Household savings have skyrocketed into the trillions. Why? Because there's nothing to do. They're stuck at home watching Netflix. They can't go out to eat. They can't buy their airplane tickets. They can't go to Disneyland. They're stuck at home, literally burning a hole in their pocket. They're ready to spend. Right now, RVs, boats, etc., record sales. They can't even keep them in stock. I'm trying to get a new car. I'm trying to get a Toyota Land Cruiser. I had to call up a dealership in Houston today that had one and just said, I'll take it. Like, don't you want to test drive it? No, I can't find one. So it's insanity right now. So what you want to do right now is look for restaurants. Hey, I'll get the Cybertruck when it comes out. It just ain't out yet. Look for restaurants, hotels, airlines, furniture, retailers, all these cyclical stocks. Remember, we were looking at the rut, right? Small caps. Look for them to catch up and do well. Not as exciting as Tesla. Don't get me wrong. It doesn't mean I'm not going to trade Tesla, but this is where the action is going to be. Big tech and data will also do well. The best portfolio I could think of, if you could only pick 3 stocks, would be Facebook, McDonald's, and CGC. You got your data, you got your fast food, you got your weed. And, that's probably the most balanced portfolio outside of gold and Bitcoin that you could have if you wanted to pick 3 stocks to hold all of next year. Yeah, the Range Rover does look pretty sweet as well. I was actually looking at both of those. I think it was kind of trying to find something in, Wimberley, Texas is a small town, just trying to find something that was a little more under the radar, maybe. I don't know. We'll see. So how to trade all this. So first, you have to reset. Don't get caught up in the news. They have no clue, and their only job is to increase your anxiety so you'll stick around for the ads, okay? Screw them. What used to be a 3-week move off of a daily signal now happens in 1 to 3 days. Things are moving faster. This is huge and very important to understand. Oftentimes, you have to reduce your position size to survive an environment like this. So if you're struggling, I would say 8 times out of 10, all you got to do is cut your trading size in half and double your stop. You're going to now be outside of the noise and the algos. And that's really the key. And the algos do run stops. They can't see your stops, but it's no secret where the stops are. Everybody puts their stop in the same place. They do run stops because they hunt for liquidity. If you know that, though, guess what? You can trade smaller and have your stops outside of that range. Yeah, do the zebras keep you out of the radar? And the good news is I can never find them. So apparently they do. Nobody can see them, not even me. So trading smaller to make more money. This is probably the most counterintuitive advice you'll ever hear in your trading career. But when you're trading large, you're not a lot of times, when you're trading large, you're trading nervous, and your P&L curve is going to look like an EKG chart. If you trade smaller, you're going to have a more balanced up equity curve. Okay, you're still risking the same amount of money, just adjusting to the new realities of the market so you don't freak out. Remember, at the end of the day, our goal is just to make money. It's not to be right. It's not to make a killing. It's not to see how much anxiety we can take. It's just to make money. In addition, it is critical to take care of your mental health. It is very difficult to sleep well in a market that is volatile if you have a ton of positions on. Okay, I joke with my wife that she's like, "Oh, we should go get a massage." I'm like, "I'm flat. I am getting a massage." Flat is the new spa treatment. Use it to cleanse and relax your mind so you can pounce on opportunities when they come. I like to go all flat at least once a month for 3 or 4 days. Obviously, over a long weekend makes that easier. I'm planning to be 100% cash the last 5 or 6 days of the year for the most part, depending on how Tesla acts. But you got to have those, you got to have those reset moments. You can only trade as good as your mental sharpness. Yeah, no, I love Ethereum. So I would go, I go like 75% into Bitcoin, 20% into Ethereum, however you want to split that up, and then like 5 to 10% into the DeFis. So another thing here is stop thinking logically. Engineers, super smart people, they'll have a tough time in a market like this because nothing seems logical. And things like, this is really cheap here, it can't go down anymore, or this is insane, it can't go any higher. You've got to banish that, okay? It's just price action. Now, there are times when I think it makes sense to hedge, although, it seems, I think the last 3 times I've hedged, they've all just expired worthless. Well, it's insurance. At some point, a hedge comes in, does make sense. But the main point is we are not in a logical market. Markets move because they have to, not because they want to. It's all about the supply and demand of shares available. If a stock is going up, a stock is simply going up because there's 1,000 shares offered for sale and 2,000 shares of, trying to be bought. That will propel a stock up for as long as that imbalance is there. That's it. That's all it has to do. And people could be buying it because they're stuck short. It doesn't mean that it's a value proposition or anything like that. Focus on the price action and specific signals and release the outcome. So how to trade this kind of a market. The best time to establish new trades is the first hour and the last hour. The first hour is what I call fishing, meaning that you're looking at the charts and it's like, if you get like a flush down to a specific level, that's fishing. You've got your order there, you're seeing if you can get in. The last hour is nice because the afternoon just kind of blah, and then the last hour kind of tees up the next day. So that's kind of typically when I'm entering and exit trades. This doesn't mean that I'm day trading the first hour and day trading the last hour. It just means those are the times that I'm typically entering or exiting positions. Well, entering positions, you have your exits in place and they get hit when they get hit. Use the afternoon to relax. I typically from 11 to 1 am away from the computer. I'm taking a walk, I'm doing a workout, something. Just get away from the computer. Cash is a position. Remember, you can be flat as well. You can be long, short, or flat. Cash is a positions. All right, so let's look at some example setups and some example trades. First, a note on trading the short side. Now, I like trading the short side, especially when it actually sets up. The biggest advice I can give you about trading the short side is first, have an actionable signal. But secondly, understand what kind of environment opens up opportunities the short side. The first thing I look for is that the S&P 500 closes below the 21-period moving average. Now, if it gets too extended above it, I may look to hedge, okay? That's just hedging my longs. But if we break below it, that's a momentum trade to the downside. So I'm looking for that, or if the VIX spikes above 30. When this happens, I change my trading approach drastically. In this environment, I shoot first and ask questions later. First, I will generally just close all my longs. Hint, guess what? I can always get back in. I would rather be out and safe than in and in pain. Okay, you saw what happened in March. There were people that lost a lot of money because they just simply wouldn't get out of their trades. From there, the short side is nice because you don't have to do scans. I stopped wasting time looking at individual stocks and charts. I just trade the indexes. The worst is you're right that the market goes down, but you decide to short Amazon, and that day Amazon's up $80 because of some news announcement, okay? If it's a down market, Just stick with the indexes. It will make your life a lot easier. So basically, I stick with the S&P 500, the spiders, ETF, as well as options, the futures or SPX, and the NASDAQ. That's all you need. Yes, you could short a stock. Yes, you could do IWM too. But again, if you're trying to keep your life simple and the markets are going down, you could make plenty of money just with these, and it'll make your life a lot easier. Now, one way when I get a short trigger, this is an example when it would close below the 21 EMA, we sold call credit spreads on the NDX for 26 bucks. And then like 5 days later, they were worthless. That was a nice trade for selling, a kind of a low risk trade for taking advantage of a down market. All right. So that's one way you can do it. The other thing is hedging. So on this particular day, you can see that I was down in Beyond Meat and Shopify, but I had hedges here. I was short the S&Ps. I had puts on the Qs and puts on the spiders. Okay, so I had some gains there. And then TDOC was bucking the trend. It was a honey badger. And if you guys remember, I was actually trading Lupton coffee there before it went bankrupt. So the point, though, is that even in a down market, you can have a balanced portfolio. It doesn't mean you have to lose money just because it's a down market. And then last but not least is that, when I talk about, this is why, when I talk about the 21 EMA, see here how it, it came down on the 21 and bounced. Here it closed and it bounced, right? But when you get a decisive close below it, that's usually an end game. Okay. And in fact, typically the next day you can short whatever gap up there is. And from there, you can short rallies to the 5 period or 8 period moving average. That's a momentum down market. Okay. And, we've got the 5 period moving average, the 8, the 21, the 34, the 55, and the 89. And in a down market, it's just going to ride the 5 and the 8 EMA. As long as they're below it, short the rallies. When you close above the 8, you might take a stab for a move up to the 21, but that's the easy down market. Okay. Once you cross back above the 8, then, the bets are off. Just don't fight it. Just don't buy the dip here. It's too hard. There's no reason to make this too hard. Okay, so in addition, when there's a down market, I do like to look for stocks bucking the trend. If you guys remember in March, TDOC and Zoom were, making new daily highs. That's fine. Those kind of stocks are fine as long as they're trending higher when everything else is falling down. But if the market's falling down and as Apple's down, you don't buy Apple, right? If the indexes are below the 21, it takes all the boats down with it. Now, right now, of course, everything is up, okay? But so on the long side, I don't necessarily want to trade the spiders because, that's boring. I look for high beta stocks. That's why I'm a fan of the Teslas and the Shopifys and the Spotifys of the world, because if the S&Ps or the Qs are up 1%, they could be up 3%. So you get a little bit more bang for your buck, okay? Now, if there is any habit that will save a trader, is don't buy a stock that is more than 1 ATR away from the mean. That one rule alone will save you more money than anything else. At that point, you're just chasing. Are there exceptions? Yes, of course there are exceptions, but they are rare. Tesla would be an exception to that. It's a high short interest stock. All right, that's an example. But again, it's the exception, not the rule. If you're newer or you've been doing this, for only a couple of years, that one rule will save you more grief than anything else I can share with you. So what do I mean by that? So here, let's come back to this one. Here's Shopify. We were looking at this one today. Someone asked me today in the room, could we buy this here? Now, when I say 1 ATR, this is the mean. That's the 21 period exponential moving average. The ATR is simply the average true range. That's an indicator that's available on any platform. These are Keltner channels. Keltner channels plot the average true range, so you can see it visually. So what I simply do is have a 1, 2, and 3 ATR, which means I have 3 instances of the Keltner channels on there with the settings of 21 EMA, and then the ATR is set at 1, 2, and 3. Now you can plot that. Guess what? If a stock gets to 2 ATR, the odds of it reverting back to the 21 period moving average rise exponentially. So in a perfect world, you're buying at the mean and you're selling at 2 ATR. Okay. And then you wait and you reload up at the mean. Are there times you're going to go to 3 ATR? Yes. That's rare. Do you buy at 3 ATR? No. What you want to do is that your goal, okay, your job as a trader is to be Walmart. What Walmart does is they anticipate choking on an ice cube. Still going strong. Okay, so no, it's not the same as Bollinger Bands. Bollinger Bands measure 2 standard deviations. So your job as a trader is to be Walmart, which is to anticipate demand. Walmart knows Memorial Day is coming, so 4 weeks before that, they load up on hot dogs at $1 a piece. When the demand swoops in for Memorial Day weekend, they sell them at $3 a piece. And your job as a trader is to anticipate demand. You buy at the mean, you sell on Memorial Day. You buy at the mean, you sell on Memorial Day. Don't buy on Memorial Day. You're paying the high price, okay? So it's a really important distinction. So Jack in the Box is a good example of a stock that's setting up right now. You've got here's a daily chart, and a weekly chart. So I like to look at the ATRs. So if we get your buy zone is essentially near the mean, in between +1 and -1 ATR, and your target is going to be 2 ATR. Very simple. So we try to get in this case at about $90, or if we could buy a pullback, and our target's 95. You can buy calls, you can sell puts, you can buy the stock. What's nice about the squeeze is that sometimes the squeeze will get you to 3 ATR. Okay, it'll get you that greater move. And what's nice is when you have a weekly squeeze, that could also get you to 3 ATR. Okay, that's what we are looking for. Okay, that's what we want to do. And now here's a hint. If you have some stocks like Tesla that are always seem extended on a daily and a weekly chart, drop down to the 30-minute chart, okay? So you got to squeeze by the mean. You got to squeeze by the mean. You got to squeeze by the mean. You know, look, if you're familiar with the RAF, do that. So you can drop it down to smaller time frames as well. These were all huge trades on the 30-minute chart. But the key point here is to remember, you are not trading ever. You are not trading Tesla. You are not trading Shopify. Okay. You're not trading whatever the symbol is. You are trading a high probability moment in time driven by other trading behavior. It is those high probability moments where you make your money. Okay. The high probability moments are when you have a squeeze and you're at the mean. That's a high probability moment. That's it. It doesn't matter if that's Jack in the Box. It doesn't matter if that's CGC. It doesn't matter if that's 3M, or if it doesn't matter if that's Apple. Okay. That's a high probability moment in time. Otherwise, if you don't, that's your edge. Otherwise, if you're chasing, again, you're just, and I say this with as much compassion as possible, but if you can't get that discipline, then essentially trading is an activity where you're merely financing your own psychological and monetary destruction over time. Right? I wouldn't want that for anyone. I wouldn't wish that on my worst enemy, simply because of karma points. But what you want to do here is that you want to understand what edge is, and then simply keep calm and just wait. And that's your job as a trader. Identify the edge and then keep calm and just wait. You're going to be ahead of 90% of the other traders out there, especially the 13 million that have opened up new accounts. Okay. Okay. The other thing is, this shouldn't be stressful. Okay. And this is the thing, is when you're sitting in front of your computer, you should never be wondering, what should I be doing? What do I do here? Okay. If you are wondering, that means you don't have a plan. You're either waiting for your edge to develop by the setup we just talked about, or you're in a position and you're waiting for an exit, either on a stop or your target. These setups are so simple. I've taught my 10-year-old how to do them. About once a week, he comes into my office and he's like, "Dad, I need $100." I'm like, "Okay." And he'll set up a trade. He'll go through and set it up, and he gets his $100 and he's done. There have been days where I am down on every position and he comes in and he makes his $100. I'm like, "You little bastard." But what's great though is he has a plan. He's not tied into like, "Oh, what's the target?" He's just like, "I need $100. I got to buy some Roblox." I'm like, "Okay." So it's actually fascinating to watch that, because he has zero baggage when he's doing this. Now we've been talking about stocks, but you can chart and do the same setups on the futures. You can do it on Forex. You can do it on Bitcoin, I do the same setup on everything. So if all of this is new to you, for better or for worse, I have lived through multiple market crashes, speculative frenzies, economic booms, and recessions. I've seen what this market can do. I've made every mistake in the book, but I'm a quick learner and I rarely make the same mistake twice. I usually invent new ones. My mission in life is to prevent as many people as possible from making the same mistakes I did starting out. I don't know why I had the resolve to keep doing this. I did this for 8 years. I blew up 3 accounts before I got to the point where I was confident enough that I could quit my job and do this for a living. Okay. I wouldn't wish that on anyone. I went through some really tough times with that. But I do that by showing you the way. I show you the way by showing you what I've learned. And I think, that's the biggest thing I can talk about. If you guys are familiar with EO and YPO, I'm in both of those. The whole point of Forum there is to experience share. And then by sharing experiences, the entire group can benefit from it. And that's what I look at here is we come together, we share our experiences, we show what we're doing, and everybody can benefit from that, including the person who's sharing. So what to do with trading profits? Okay, this is a big thing, and I stay on top of this a lot. But as we're trading, yes, I'm trying to make money trading, but I also spend the year talking about what I'm doing with trading profits. You may like that or you may not like that, but that's always interesting. Like, so, this year, crypto, I'm going to be going heavy into crypto, and different things like that. So, and there's going to be a lot of uncertainty about what's going on. And trading is a hard thing to do alone. It's much easier if you've got a crew that's with you and understands you and supports you with that. So, I think it's good to have optimism that you can do this, but it's good to be pessimistic that your next trade is going to work out. It's kind of a weird thing. You don't want to have fear of the unknown, just focus on the risk of the unknown, right? It's like, okay, so what? You might not be right, but if you can, if you're willing to risk X, then who cares? That's the game here. So we do have a room where we call out trades and market commentary. We post what we are hearing from funds and other people in the industry, so we know how to protect ourselves. We know essentially when to be conservative, but more importantly, when to go for the kill. There are those moments in time, like once a quarter, where it's like, guys, we're doing 20% in Tesla or whatever it is, because everything just kind of comes together. They're rare moments, but you want to be ready for them. And at the end of the day, when you got the right crew to support you and you got the right strategy, you develop an equity curve that kind of looks like this. It makes this a lot easier. It doesn't mean you're not going to wake up and there's some days that are crappy, but you have an equity curve that's gradually and sometimes sharply going from the lower left to the upper right. That's your only goal here. You don't need to know everything. In fact, it's better, the less you know, the easier this is to do, which is kind of ironic. More knowledge in trading does not necessarily mean more profits. It generally means more confusion. And I love this saying here, what you run from persists, what you run to is dismissed. If you're going to do trading, embrace it head on, face your fears. They'll evaporate if you, if you're willing to deal with it honestly and, not be afraid of the stuff that comes up and things like that. So anyway, hopefully this is all stuff that's interesting. So last closing thoughts here on this, and I'm going to talk about a room here if you guys aren't familiar with it. I was listening to a podcast from Michael Lewis. He's the guy that wrote The Big Short, Moneyball, and all that. And he had a coach, a baseball coach, that really changed his life. And what his baseball coach, who was mean, he was a hard ass, but he would tell and he would admonish these kids at the end of every practice. He's like, God damn it. Pardon my French. I'm quoting the thing here. He's like, don't go out there and be good, be great. And I would say the same thing in trading. Don't just go out there and screw around. If you're going to do this, do it. Don't be good, be great. All athletes, even LeBron James, they have a coach who guides them, pushes them to be their best self. I have a coach. Mark Douglas used to be my coach. He sadly passed on. I've had to find other coaches. A coach will have high expectations for you to the point where you will have no choice but to live up to it. This is about winning, yes, but it's also about gaining self-respect, understanding sacrifice, developing courage and endurance. Okay. This is manageable as a team. It is hard to do on your own. If you're trying to do this journey alone, left with our own thoughts, we fall to the level of our mental chatter. Okay. Mental chatter, if left unchecked, is kind of ugly, right? That's something we got to kind of battle. So, wow. Again, I kind of joke with this, like the next time there's a photo shoot, I think I'll shave, get a haircut, and get a good night's sleep. So what we have here is we have built up a great team We're very passionate about doing this. And we have a group of us that hang out in a trading room at different shifts during the week. Henry and I have been doing it kind of since the beginning. Bruce shortly thereafter, Danielle, TG, Allison, Jack, Sam, a couple others. And it's great. It's just a great group. We sometimes people ask, well, why don't you guys why don't you just be on the mic all day? Because you got to manage your own time too. So what'll happen is like, I might be on the mic only for an hour, but guess what? During the other time, I'm answering questions or I'm posting trades, and same with Henry, and same with Bruce, and same with Danielle and everyone else. So there's 8 of us and some extra ones that are on throughout the day. We're talking about the markets, we're placing trades, no matter what's going on. If our positions are doing great or if our positions are getting killed, we're going to show up. If the markets are exploding or they're falling or they're flat, we are going to show up. Yeah, Voodoo Daddy comes on too. So we got some guys in there too. The schedule we have, you can see every day we'll have a schedule, and I may be like, okay, Henry's on for the first hour, then Jack, then Sam, then John. And so, there's a schedule and you can kind of see. And what's great about this too is that if we have alerts, so we have an app, it's been amazing. I wish I had this when I worked in the corporate world where first of all, you could be on your phone and you could listen to us with your earbuds. So that's kind of cool too. But, if you're in a meeting, we've got a push notification app. And if we do a trade, guess what? It just pops up on your phone and then you can just do it on mobile. So I would have killed to have this when I was trading versus I was by myself in corporate America placing trades on a phone, while in a meeting. It was crazy. So our monthly subscription right now is $197. Now, we are increasing this on January 1st, I believe, to $247. We are actually doing this to purposely limit the size of the room. Now, some good news here. We are not going to raise your rates, okay? If you're paying $197 right now or whatever you're paying, your rates will not change, okay? We are not in the business of jacking people. We are in the business of trading. But the idea is that if someone finds us on January 2nd and they want to join, guess what? It's going to be $247 a month. And again, we are doing that on purpose to kind of start limiting the size of our room. If you want to save money, you can go quarterly, okay? Or save even a little bit more, you can just do the full annual. Sometimes it's nice at the end of the year, depending on how well your accountant. That could actually, it's a tax deduction, so it's kind of nice to get it all in December. But what all of these include are access to our real money live trading rooms. We're trading real accounts. We're not trading demo accounts. Instant mobile trade alerts, daily actionable market insights. You got an A-list team with it's about 250 years of experience. We've got a private online community. By private, I mean this is not, you get what you pay for, right? And there's some people ask, well, why don't you have like a free forum? Because have you seen what free is Facebook? Okay, we want people who are committed. We actually really uphold the idea of you got to treat each other with respect. If someone comes in and they're a jerk, we just mute them. It's okay. You can disagree with me, you can disagree with Henry, but leave your teammates alone. And this is a house party. And there's bouncers, right? So it's like, hey, look, go somewhere else. We want. This is a group that's going to work together and help each other make money. Help each other. Lift each other up on days when we're down, and vice versa. So, exactly. Now, the one thing here is on December 31st, I am going to do a tax loss harvesting class. So what is this? So I discovered this trade like 20 years ago on accident. I owned the stock at $10 in June, and it kind of kept drifting down. And then I bought some more at 8 in September. And then like in November, I bought some more at 6. And then like on December 15, I bought some more at 4. And then on December 31st, when I couldn't take the pain anymore, I wanted to get out. And it closed at $3 on the 30th. And then it got down to like $1.50 on the 31st. And then the next 2 weeks in January, it rallied back to like $7. I'm like, what? And so I discovered this phenomena where these stocks that specifically have been trending lower all year, you get the psychology of people just in denial. But finally, on the last day of the year, they're like, you know what? Let me get out of this. I can at least take the tax loss. Okay, we're not talking institutions here, right? We're talking individuals. The market makers know this, and they step away from the bid and they say, screw you, buddy. And the stock gets destroyed. So we have this class where we step in, we look for these opportunities, we buy, we hold them for a week or two, and we flip them out. It's great. So if you get the quarterly or the annual, it's included. If you're on a monthly subscription and you're a member, so this, if you're not in the room, it's $297. If you're on the monthly subscription and you're a member, you can do it for $97, right? So you can get a severe discount. And then if you're on quarterly or annual, it's included. So hopefully that all makes sense. If you go to this link, simplertrading.com/community, it will explain everything to you. And you can call us, of course, and then you can email us, just support@simplertrading.com. So here, let's just move this chart back. See where Tesla is going to open up tomorrow, ideally at 800. Okay, so what we're talking about here is essentially a proven edge, okay? Oh, and let me emphasize this again. Even though, okay, and I just want to emphasize this 1,000%, even though we are raising our prices, whatever you're paying, you're locked in. Okay, so if you're paying $197 monthly and it goes to $247, guess what? You are not going to be paying $247. Now, if you cancel and come back, that's a different story. If you're annual, so does that make sense? So you're locked in, you're grandfathered in. We're not looking to Netflix anyone here. We want to raise the prices for people joining us after the new year to deliberately limit the number of people in the room. We figure it's the law of economics. If we kind of raise the prices, maybe fewer people will join. We kind of like the room where it's at right now. Can I buy 10 memberships and resell them after the price goes up? I love that kind of thinking. No, so good question. Do we need to renew by January 1st to keep our price? No, so if you're already in this, I believe it's all automatic renewal. I might be wrong on that, but if you're a member right now, you're a paying member, that's your price. Yeah, we're not going to Netflix you. So the markets are challenging and they're constantly throwing curveballs, some of which will beat us right in the face. That's why we trade together. Okay. I have some days where I do great and other days where I'm like, oh my God, guys, pick me up off the floor. Today, Tesla was up $3 and I decided to get out, and then I watched it rally $20. That was a rare move for me. Usually it's the other way around, but the room consoled me. And then, I got back into it later in the day. We all have our days, right? It was, it's, maybe it's the end of yearitis. It was kind of funny. Yeah. Just like today. So again, our monthly goal, again, you can get in right now. So and I want to emphasize this enough. If you are already a member, this is just FYI, your price is not going to be raised or anything like that. If you're not a member, I would encourage you, and this is like, wow, this is really cool. I would encourage you to sign up, because after January 1st, prices are going up. This way you can lock it in. But at $197 a month, you get the live chat room, which is pretty awesome. And we are improving this technology drastically. You got the dashboard, the alerts, and you can actually log into this on your phone or your iPad. It's pretty awesome. I mean, just compared to when we first started this, this kind of, it's pretty awesome. You get daily premium videos with a recap of the markets. There's real-time alerts, chat room. There's exclusive member webinars, trading room archives, all kinds of fun stuff. The goal there is basically just to kind of help you accelerate your growth. I traded on my own for 3 years after I left corporate America, and guess what? It sucked. I enjoy being in an office by myself trading, but I want to talk. I want to exchange ideas. And that was kind of the genesis of doing this. And it is fun trading in a community. It's just, and it's fun, but it also increases your odds of success. As a team, there's a saying like, if you want to go fast, go alone. If you want to go far, go together. Do it as a team. And, you're going to have some off days. You get to know some of the members in the room. They're going to pick you up. They're going to keep you going, right? That's the whole idea of a team. It's great. I'm watching, my oldest son, he's on a basketball team and they're undefeated this year. And, he's had some great games and some crappy games. And some of the other players have great games and crappy games. But, they're a team. They work together. And it's awesome just to watch that. So if you want to go quarterly, this is just a way to save a little bit of money. So $547 a quarter. and you get all the same benefits. You just get a slight discount. And then on December 31st, you have a free ticket to the tax loss selling class, which we'll be doing on the last day of the year. And then the annual, you actually save the equivalent of about 2 months, I believe is what it is. So it's like you buy 12, you buy 10 months, get 2 for free. And it's the best deal financially. And, depending on your CPA, oftentimes you can write that off. So it's a good time to do it at the end of the year. Another thing here, which is kind of cool, we do now accept what's called PayPal credit, which means you could do PayPal credit and then you have 0% interest and 0 payments for 6 months. So that's kind of a cool way to do it. And I think you can it still counts as an expense. So if you want to write it off, you can. So it's kind of a nice win-win that way. So that's kind of a cool feature. And I think that's the last slide. Okay, cool. So we're on the last slide. So I'm happy to stick around for questions. We've already been hanging out for 95 minutes. And which I know I want to respect everybody's time, but let me answer a few questions. I'm going to leave this on here. Speaking of PayPal, right? We just flipped out PayPal. Are the rooms recorded? Yes, we do record the sessions so that you can watch them later. Would it be a good idea to pull some money from the IRA funds and buy golds? You could just buy GLD. I'm actually fine just with buying GLD, the ETF. I think that's totally fine. What number of periods are the ATR set? I have 3 Keltner channels on there. They're 1, 2, and 3. Yeah, so if you're already a member and you would like to get a link to purchase the tax loss, guys, gals, do we have a link for them to purchase it, or should they just contact support? What is the best bet there? As a new, do you have to have all the tools to benefit? No, so you don't. Yeah, I think you'll like them, and some of the tools, by the way, are free on Thinkorswim or Tastyworks. And then there are some premium tools, but we share our charts. You can actually see our charts that have all the tools on it too. So you don't need them. Which brokers do you think give the best counterparty risk? So this is a question that came up a lot in 2008, and believe it or not, the big brokers like the Schwab and TD, which is one entity, Tastyworks, I think they're all fine. The way they segregate their funds, all that kind of stuff. You're locked and loaded there. What size account are you thinking of starting off with next year? So I think in the trading room account, I'm going to drop it to 250,000. That would be in my TOS account, and then I'm going to move my big account over to Tastyworks. But I wanted to do a little bit smaller account in the trading room just to make sure, I can, with the big account, I can like, let's buy some Tesla options at $70 a piece. And if I have a smaller account, I'm forced to kind of structure trades, a little differently, and which I think would be beneficial. I am a full-time trader. What's the best room and trader to follow? So if you're a full-time trader, I would definitely just do this membership. So options gold membership. You'll see the different traders, but what you'll learn is the different styles. So as an example, Bruce has been, he traded on a hedge fund for 20 years. He does income trades where he might be doing calendars and double diagonals on the SPX, super reliable income. And if that's your thing, you follow Bruce. If you're more, aggressive, I'm a little bit more aggressive. So if that's your style, but you kind of get a feel of what everybody is doing. And then you'll kind of see, people go in streaks like, wow, Henry's got a hot hand right now, or that kind of stuff too. And you'll kind of see it. And, you kind of get a feel of it that way. Yeah, Bruce is calm, cool, and collected for sure. He's seen everything. Yeah, so the gold room is open during market hours every day. Yeah, Henry, I'm doing the same thing. So I think I'm gonna put like, my large account last year started at like 1.3 million. I'm probably gonna do like maybe 4 and just put that at tasting. So I'm curious to see how that'll work out. What is the difference between the options room and the options gold room? It's the same. So if I have said options room, what I mean is options gold room. What signals to you that liquidity is starting to dry up in the market? So when liquidity dries up is when we're puking. So on up moves, there's plenty of liquidity. On the down moves, the algos step away. So believe it or not, it's kind of like what comes first, the chicken or the egg. So Joel, yeah, you can start in January. The main thing you want to be careful of is on like January 2nd, the rates go up. So, I would encourage you, if you want to sign up like December 31st, you can at least lock up the lower rates. Oh, am I going to continue the small lot service? Yes, absolutely. Yeah. So that's not going anywhere. Ashvin, you have a question? That's I did not see it. Let's see. If truly, yeah, no, awesome, Mike. That's great. What are the key indicators that I like? The squeeze, which I talked about here, I love that. And then, simple things like the 21 period moving average, stuff like that too. And I apologize, guys. There's like a lot of questions. It's like reading tape. Ashvin, the alert is not working well. Yeah, just make sure sometimes you got to, reset your, make sure you're downloaded the latest version of the app and stuff like that too. Yeah, no, Tasty's different, but once you get used to it, it's nice. It's nice and light. And by the way, I'm going to have my trading room account and my large account, but I will show you guys what I'm doing in my large account too. Can you do this with 10K? You can. We do some of the trades you just won't be able to do, but some you will. And we do have a specific small lot service as well, which is kind of different. But a lot of people do both, and then they can kind of gravitate towards one or the other. Do you also do training in the option class? Yeah, so we kind of during the day, we do focus a lot on specific trades, but we'll kind of talk through what we're doing and, like why we're setting something up and stuff like that too. Because the main thing, we want you to understand it. And at some point, if you want to do it on your own, that's fine. We're good with that. Like if you want to try it for 30 days, you're like, I'm good, I'm out, totally fine. Our feelings won't be hurt. The idea is we just want to show you what we're doing. And then if you like it and you want to stick around, awesome. We try to make it a safe environment. We've got a mute button if people get a little insane. You've seen people attacking each other like on Facebook. We just don't do that. And everybody has a bad day. It's like, okay, look, we're gonna shut you off today, and you can try again tomorrow. You weren't your best self today, and that's fine. We're all human. Oh, Polly, thank you. Yeah, and we do. And if you are brand new, there's a training room as well, and so we do specific training in the training room, so you can kind of get up to speed. It's not a bug; it's a feature. But oh man, PGA Trader, yeah, Tesla did me wrong today. No, I did myself wrong. I'm not blaming that on Tesla. What about Bitcoin if the U.S. starts regulating it? It's not bad for Bitcoin. So yeah, I know it is a longer discussion, but that's not bad for Bitcoin. That's awesome, Nathan. So Nathan just said something like, thanks a ton. The best advice I got from you is to stop drinking alcohol. And, it's a tough thing. I've just watched, alcohol is an interesting thing, right? This is not a long lecture on that. But there was a book I read, and after I read the book, I just, and I was always like, oh yeah, I'll have a cocktail or a glass of wine. And it's like, and it talked about how over time it actually lowers your base level of awareness and happiness. And thought, oh, well, that sucks. And basically, if you can quit it for 10 days, it's out of your system and you stop craving it. And the craving is your gut bacteria manipulating your brain for more alcohol. That's all it is. But once you get rid of it, if you can stop it for 10 days, you lose the craving, and it's like you sleep better, you're more clear-headed. It sucks because, I'm the first one to say like, hey, it's a couple of drinks are always fun, but when it's done anytime you take a drink, it's 10 days. Your next 10 days, Your metabolism is going to be slower. Your organs are going to be working harder. All that kind of stuff. So take it for what you will. I mean, I'm always say do whatever you want. But yeah, that is a potentially, sadly, the best biohack you can do. That's funny, Jim. No, awesome. That's great. Okay, cool. Did you on Tesla? Yeah, boy, that's a well. We'll see what it does tomorrow. Never a dull moment, right? No. So for Airbnb, I'm not sure yet. I always like to give IPOs a couple of weeks. Definitely some FOMO there. Well, for FedEx, we'll see where it opens, right? We don't know where it's going to open yet. We did that earnings trade, and but it's within the expected move, so it's not horrible. At the very least, we should be able to scratch it out if it opens up at 281, but maybe it'll come back a little bit. Oh, LQDT. Yeah, I'll take a look at that. No, so Elliott Wave. So we do have a guy, David Starr, who's the Elliott Wave kind of genius, and so I look at his work. There is a lot to be said for it. I have found that I tend to, when the setups that I like tend to also gravitate towards Wave 3s and Elliott Wave on accident. So, just take that for what it's worth. All right, guys. Well, cool. Well, yeah. So let's do this. I want to, I'm going to leave this up here. And again, I'll just review this again real quick. So if you're interested in all this, I wonder if I can make that go away. Go away. There we go. There's a secret. You got to move your mouse. So you'll have to type this into your browser. You can't click on this. Just type in simplertrading.com/community. It'll take you to this page. And if you're newer and you would like to take advantage of our services and lock in these lower rates before the price increases in January. Okay. And again, we won't Netflix you. Once you're in, you're in. If you are a member and a monthly member and you would like to purchase the tax loss harvesting class, while this is a $297 class, if you are a monthly member, we'll do you a solid. You can do it for $97. And I don't think there's a link for it, but you can email us at support@simplertrading.com. And then as a non-member, if you don't want to sign up, that's fine. It's $297. The class pays for itself. It does every year. And again, this is something where it's an investment in your future as a trader. We have seen this pay off for people over and over again. And it's something that, it's fun to do. We all enjoy it. It's, I think it's a kind of a mission-based goal for us. I mean, we do it because we like trading. So, but on the other hand, too, it's fun to watch other people be successful at the same time. Not every day is going to be, sunshine and all that kind of stuff. But part of working together as a team is also working through the tough days, working through that tough week, understanding what happens when the proverbial crap hits the fan, celebrating together the big wins. It's more fun to do as a group. It's just part of life is community and finding something that's interesting to do. And this is kind of the perfect blend of all that for people who are interested in trading. Yeah, and if you are a member now, again, good news, your prices will stay as they are. So we certainly, it's, the idea, it's like, oh, hey, you've been a loyal person for the last 5 years. We're going to raise your price. That's kind of a, that's what I call getting Netflixed. Although, Netflix is providing a lot of value for their monthly fee, so I won't knock them too hard yet. Yep. So, and if you want to I'm sure there's going to be like an email or something that's going to go out for the tax class. So if you're on a monthly and you want to get it, you know, we'll figure that'll get figured out. It'll get addressed. You can send an email to support. There may be a link going out as well to support that. Yeah. What we should do is just create our own cryptocurrency, and then we can start using that. All right, guys. So apologize too if I didn't get your questions. If you guys are in the room, I'll be answering questions tomorrow as well in there. This is recorded, so you can go back and check the replay if there's something that you did miss. Thank you guys for joining us tonight. You guys have a fantastic evening. Enjoy the rest of the year. Stay safe over the holiday season and get rested and relaxed for a fantastic 2021. All right, you guys have a good night. For those of you in the room, I'll see you tomorrow bright and early.